Good evening. Welcome to the ShadowTrader video weekly for Sunday, March 25th, 2012. Today we're going to be talking about the concept of the market getting ahead of itself and rallying without, testing uptrend lines, etc. So I'm going to be using the S&P as an example, and also gold, and then we'll get into an individual stock that I heard somebody make mention of on my trade. I think it was this week, and I think it could actually do something soon. So I wanted to point out some technicals. S&P action closed the week relatively bullish after just a couple of days down, and what we should be cognizant of is that we never got a sell-off to the prior high, which would be a really great place to rally from. It's also going to tie in with this 20-period moving average here, which would be nice, but we didn't get that. We actually got strength on Friday, and what I think was interesting about this is the simple fact that we didn't sell off here to where I thought we would, and even test this. And if we look at what happened in the profile over the course of last few days of the week, this being Friday and Thursday, etc. Thursday there was a gap down, and instead of the market following through to the downside, all you got was a very balanced profile, which indicates some value in this area and no real initiative selling to the downside. And then on the next day, on Friday, we had some action to the downside, but we stopped very abruptly at 1380.50. And I thought the market would actually go lower than that. I thought we would at least see 77, because you can see here that 77 is where there was at least some volume. Not major, but you can see this was the Fed day when the market popped up, and I thought that the market would be drawn to this level where there was some value. And then I also was keeping in mind that there was some value below us, that if the market sold off further, it would probably then spend some time more in this area, like 67 to 63, where there was some value. But instead, what happened was there was really responsive action as the bulls snapped it up. And what I wanted to point out in the profile is that almost to the tick, notice that where the single print TPOs end at 80 and a quarter, right? That's where the selling this week stopped. And to me, that's indicative of very responsive action, that if the, right here, see 80.50, it was just one tick away. That to me just strikes me as that the bulls are really in control, because over the course of, like, if you put all the different support levels that you could look at in the profile and you put them in a hierarchy, I would not take that as one of the stronger ones, right? I mean, it does work. You can see that the example here worked pretty much perfectly, but I would be thinking more of prior points of control, or areas where there's fatter volume, etc., or areas where there's low volume nodes but with high volume on either side of it, right? Like sometimes you'll come to a low volume area and you'll turn around right there, but there's going to be volume on either side of it. This is different. This is more of like a spike low, they call it, where it goes down right to where the low volume nodes end, where those single print TPOs end. I shouldn't call it low volume nodes, it's more like these single print TPOs that I just showed you, and it just turns around right from there. So this is essentially just telling me in the bigger picture that bulls remain in control. However, they are continually rallying the market, without it having a chance for a healthy sell-off. And when I say healthy sell-off, I mean, at least to a prior high, or to the 20 MA, or to some sort of a trend line support, which we're getting ahead of. The example that I was using a while ago when I was talking about gold futures is, if you look at the weekly here on gold, this is a trend line that I drew from 2009, and you can see that, we had this big failure here, and this failure here only undercut this low by a little, and I thought that this move down should make it to the trend line, and instead it didn't. It rallied up and then failed. And this is basically my theory for one of the reasons why failures occur, is because they don't rally from areas where they have a strong enough base, meaning not enough consolidation or not trendline support where they should have. So I think gold is a good example of that. Obviously with gold there's more to it than that. Gold is something that has a myriad of fundamental factors to it, etc. But from a technical level, a rally from where there's a solid trend line is one that can be trusted a lot better. And if we switch this to a monthly, right, you can see that there's areas even further beneath us. If you want to go all the way back to like here, and connect lines like that. I mean, the dominant trend from where it really started is really far below us, and also on the monthly you can see that it's just a whole lot of consolidation just at this level. So that also confirms what I've been saying for a few weeks now, essentially, ever since this breakout here to the upside. When this trend was broken, ever since this failed, I managed to get out of here unscathed. My exit was on Twitter, basically in here just before we started to really, really tank. And since then, I've gotten a myriad number of emails from people just basically asking, "What's the deal? Like, is it over? What are you doing, etc." And I keep saying the same thing. I say I have no position. My only position is physical from 1250, which I'm still holding. I'll probably hold that until 1500. If we don't get response at the 1500, meaning that the market doesn't respond to that support and bounce, then to be honest with you, I'll probably sell the physical too, because then the market would be telling me that it'll probably go much lower. If we do come to that 1500, I will probably be a buyer, on that more dominant trend line. But until then, you really just have a situation where you're completely just stifled by being in the middle of a very large range. I mean, it doesn't take much more than just drawing two quick horizontal lines, and look, I mean, you're dead in the middle here, So I don't think, even though you do have some bottoming action on this current weekly here, it really poses no interest for me. Being that it's so much in the middle of the range. Okay, so that being said, in terms of keeping in mind everything we just discussed on, markets kind of rallying ahead of themselves from areas above trend lines or whatever. I was looking at this chart, not Yoku, of Zynga, actually, this recently, because I saw somebody talking about this on, I think it was on My Trade, and they were saying that they were a buyer here on this pop. And Zynga obviously hasn't traded very long. This is actually the beginning of the chart, day one, right? But if you look at where the trend line here is from the lows, and this is a trend line I think that you can really trust because it's the absolute low of the stock, right? I mean, this is a very new issue and it hasn't traded much. Notice how this trend line was respected perfectly. And if we extend this over to the right, you can see that the support in Zynga is really at 12. So the stock doesn't have to sell off to this area. The stock can just keep going sideways. But either way, I don't think that the stock holds much interest until that line touches, and I think it will. Now, obviously, from a fundamental standpoint, there could be a pop in this stock on the Facebook IPO because obviously these two companies are very, very integrated together. But even beyond that, even if that didn't exist, I think this is probably still a decent buy at that $12 level, given that it's a new issue and on strength anywhere above the highs. Remember, there's going to be open air, right? I mean, there's not all that much resistance above. So this is something that I'd be looking at the $12 level, and keeping in mind that, so far any small flurries of buying here have been well above trend, and essentially the stock needs to correct to the trend in order for it to be a safer buy, quote unquote. All right. Wrapping it up, overall, I think the market is remaining bullish. Please don't misconstrue anything I'm saying in terms of rallying ahead of the trend line as saying that the market is going to turn around to the downside anytime soon. Of course, anything can happen. I don't make all-out predictions. We can only talk about what is the stronger odds. For now, it feels to me like the bulls are in control. Last week, I talked about a number of stocks in last week's video, and many of those stocks rallied, which is another thing I wanted to talk about. I was talking about Apple, CME, Amazon, and Hewlett-Packard. Hewlett-Packard, by the way, did not do what I was saying, that I thought that we would rally out of that base, but it's very important to note there was never a buy signal. Remember, I mean, the buy signal has to be on any type of shelf like this. This is called a shelf pattern when you have a relatively flat top, right? Like this, right? You have to break above the shelf, so there's no play. Because in the video last week, I will say I was pretty adamant about saying, these patterns usually surprise people to the upside instead of the downside, right? Because everybody's thinking that it's going to be like a traditional bull flag. Well, this one wasn't. This one actually turned out to be like a traditional bull flag, or bear flag, excuse me, not bull flag, bear flag, and went lower. So if you're interested in HPQ, obviously you'd have to be looking at a lower support level now, right? But the other stocks were talked about all ripped to the upside. Amazon broke out of that wedge formation that was discussed. Apple is still holding up like a champ, and CME is showing a lot of relative strength and just kind of consolidating up in this area, and I think this stock goes higher. The only reason I'm mentioning all of this is simply to tie in the fact that, to me, with this much interest in some of these leading stocks, it doesn't feel like the rally is over, yet to me. So I think strong stuff is in play on pullbacks, two trend lines, and horizontal supports. All right. On behalf of myself and the entire Shadow Trader team here in beautiful Philadelphia, Pennsylvania, I wish you good trading and good night.